Good afternoon, everyone, and welcome to Stock Market Today for Friday, May 9th. It's Alissa Coram here. Stocks are pausing, a little bit of stalling action Thursday and a pause Friday. Is the action concerning or constructive? Here with me now to tell all, giving us his take on the market action and stocks of note is my colleague Mike Webster. It's great as always to see you on this fine Friday, Webby.
Oh, it's nice to be here.
Yeah. So you're going to
I
tell
would
us
say
everything we need to
I would
know.
say constructive, and we can just that
Wow,
was the
lightning
end.
mode to
That was
kick
the
it
answer.
off.
We could. I'll see you next Friday.
Sounds good. Well, we'll explain the why behind the what. We'll talk about the action for the major indexes. We'll also look at some ETFs to see what went down underneath the surface. It was another big week of earnings, a lot of explosive moves, a lot of reversals and upsets as well. So we'll try to give a picture of that and look at some stocks of note, some that are setting up, some that we're waiting for new entries, and we'll wrap things up with a look at we'll get Webby's song of the week this week. You've indulged in a lot of music this week, so hopefully you have some good song choices for us.
Well, you actually mentioned my song 3 times this morning on IBD Live, so I don't know if you were subconsciously trying to throw that out there, and I didn't go on that tangent. I was so proud of myself, so now I saved it for the
Saved it for
afternoon.
now. Okay.
Yeah,
Yeah, I guess I didn't even realize subliminally so yeah. That's a good tease for the end of the show. Now everyone will
there you
have
go.
to listen all the way through to the end to know what the song of the week is. All right. With that being said, let's check out the action for the major indexes to give us that guidance and perspective of how we should be handling our portfolios. In terms of the day's action, the Nasdaq closing flat, just fractionally higher on the day. Meanwhile, the S&P 500 down fractionally, less than 0.1%. The Dow down 0.3% on the day, and the Russell 2000 also down fractionally into the close. But putting things into perspective here, we had some explosive gains over the last couple of weeks. So we're digesting, we're pausing here. So tell us a little bit more about what you're seeing underneath the surface, or just peel back the layers of what we're looking at here, Webby.
Sure. So I would say this week was, with the exception of Thursday's close, pretty much picture perfect, exactly what we wanted. And you set it up nicely that we had such a powerful move, initial move off the bottom, then we pulled back the way we should. Just a corrective phase. Then you had your follow through and back to back follow through, got above your 21 day, had your tests of the 21 day. So all the things that you would expect with a potential market bottom. Now, the most important thing that I see on this chart is that low versus the 21 day, that we've been able to hold above that after our test. And then you add on that today or this week, holding above your 50 day. Now, obviously, the 50 day is not in the position that we'd like. It's that red line on there and it's in a sharp decline. But it came in and it could have gone lower and still been okay. It could have actually come down and touched the line, but it didn't. Got support, had a nice upside reversal. Your expectation was to move higher, but you got to keep in mind the news environment that we're in, and we really need something to get us to go through that 200 day. That 200 day, the black line is your ceiling, and until we get above that, I'm not going to feel comfortable. Really on any level, I'm always going to have one foot out the door while we're underneath the 200 day, and it's that big of a deal. But it doesn't mean you don't trade until you get above the 200 day, unless that's your style, which I would respect if someone could do that. But I'm a little too active for that. But,
Mhm.
let's talk about that for a second. If you went to cash when we went through the 200 day, even though you would have missed this bounce off the bottom, you weren't in it for that way down, And so there is there's a school of thought of just if you're underneath the 200 day, just go to cash and don't even trade. But that's a topic for maybe a webinar or IBD live.
Mhm.
Um, so now let's go back to the daily on SPY for a second.
Sure.
And what I like is this 21 day, the green line coming up through the 50. Because remember, for a power trend to start, we want a few things. We want the easiest thing is it to be an up day. Well, we get those all the time. The 50-day to go in an uptrend, to be flat or
Mhm.
an uptrend. So that's going to take a little bit more time. The low above your 21-day for 10 days or more, and we're getting up there. And your 21 to be above your 50 for 5 days. So now that we're crossing through, like in a week or so, just a little over a week, we could be in another power trend.
Ooh.
That's in the cards. Now, of course, if that were to happen, we'd also be likely above the 200
Yeah.
day, and at that point, we'd be pushing it really hard. I mean, I'm heavily invested in, and Swing Trader is relatively heavily invested. Uh, but we're also, like I said, one foot out the door. You get a couple bad days, and we're going to back away. Now, with this week, we have that stall on Thursday, which was the worst action we've had in a couple weeks. Let's go to the intraday. And with that said, it wasn't that bad. It was just not ideal. You had that sell off into the close, and it was just really, there's this hang over the weekend of the news of the tariff talks and everything. We don't know how that's going to play out. So there is no need for the market to really run up into it. In fact, it would be a little scary if we had ripped through the 200 day. Now we go into the
Mhm.
weekend with that news hanging over it. Better be good. Like right
Yeah.
now, if it's a non-event this weekend, that's fine because we're holding above the
Mhm.
21 day, and the 21 day is crossing through it, which it kind of should lead the market, if you're a trend follower and you believe in that, which is what we do. So I would say this action really ideal, and especially today's the distance between the high and the low being so small
Right.
and really down 0.14. I mean, that's a nothing day for a Friday, and it's just telling you that the bulls and the bears are at peace with one another. We would love peace on earth. Right now, we've got peace with the bulls and the bears for this moment in time as we sit and wait for the news. And obviously, if
Mhm.
it's a good reaction, we should gap up through the 200 day or close to it, and that would be great because on the Nasdaq, that would be the marked high as well. That 18,281, which Charles, Justin, and I did a lot of work on those as part of the IBD market school rules. And it is a very important thing that both the marked highs and the marked lows, getting above them and not just trading through it, but you really want to get a close above that. And that coincides with the 200 day, which is ideal to have multiple things line up.
Mhm.
So next week that could tell us a lot. It would also be fine, frankly, if we had another tight week. There's
Yeah.
nothing wrong. Just holding above the 21 day. We don't have to rip up next week. It's sometimes you're in a position where it has to go one way or another. Next week, if we just digest, the longer we digest in one area, the better, frankly, at
Yeah.
least in this position.
And you talked about the spread between the high and the low on Friday, and that was something else that I was going to point out as well. Is that in terms of what's constructive, you are continuing to see that reduction in volatility in trade. That shows up very clearly in the weekly bar. The spreads that we're seeing closed really tight, so it seems like even though there is still a lot of uncertainty out there, and even on Wednesday stocks had reasons to go down. We had Fed Chair Powell talking about stagflation risks, how he still sees a lot of uncertainty out there, not making a move on cutting rates. So we saw some resiliency there. We have the promise of trade talks this weekend with China and Switzerland, and a lot of numbers are being thrown around. 80%, 50%. What, are these just opening talks? Are they going to be substantive? So it could be an interesting weekend. It could be an interesting open to the week next week. And we have those levels we're watching on the upside and downside.
Yeah, and going back to the Fed on Wednesday, I will say, and I can often be very critical of Powell, but I also try to keep it real, and I thought he did a good job. Given the message that the sense that he's at, he's basically paused and
Mhm.
is aware of the situation. Stagflation, is certainly a possibility. Everyone's aware of that. No one wants the 70s all over again. If you go back and you study the bear markets, the 73, 74 bear market was probably one of the most brutal ones because it wasn't like 1929 or 1987 or 2000 or '07 where they pretty much went straight down and you had a lot of violent moves. It was just drawn out and just a, um, living underneath the 21 day for such a long time and a lot of devastation that happened, and that's because of we focus on the charts, the greed, the fear, and the hope that moves the charts, but it's really the economy and the fundamentals that move the market. We're just trying to interpret how other people are seeing that
Mhm.
through the chart work that we do. And if we get in a situation where you've got stagflation, it's it's not going to be fun. It really isn't. So let's hope that's not the case. But at least he's aware of it. And like I said, I thought he did a good job, and I'm glad that President Trump, came out and said that he wasn't going to fire him because the market
Mhm.
didn't need that type of uncertainty. So yeah, I think everyone knows where both of them stand, and I think they're very clear about it. Powell just is more read between the lines, and President Trump is more straightforward about it. And so we know that has an end date on it, and that's fine. The markets, I think, just didn't want the uncertainty of maybe he gets fired and what that
Mhm.
means for the market. That would have been a disaster. It
Yeah.
really would have been.
Okay. Are we ready to chat about ETFs? Or do you want to take a look at
Oh
RSP, QQQ, anything like that here?
no, let's do the ETFs.
Okay. Webby's ready to get the show on the road this Friday. I
I kind of
see.
have a place. I am going to see Dead and Company tonight. So I mean, if you see like a
You're ready
permanent
to
smile on my
let's
face, I'm ready to
let's
go.
get to business. I like it.
Yes.
Okay.
Yeah.
So we
I
have
am thinking, what song are they going to open up with? Anyone
uh,
have any ideas? Okay, sorry.
so we'll start with what was down the most. Healthcare continues to be a laggard in this market. Consumer staples also coming off, which is good for us. It's what we want to see. That's your defensive area. We don't want defensive to be leading. So we kind of want it to be lagging. Here's a look at XLC. This is communication services. You have your Meta and your Google in here, basically keeping pace roughly with the S&P 500, pausing here, but in a bit better of a position than the major indexes, above those moving averages, and we're trying to get them stacked properly now. We've seen a lot of double bottoms in this market, setting up a lot of double bottoms with handle type structures. So that's something to be aware of as well. Here's a look at technology. This looks very similar to the NASDAQ composite, and we are seeing a slight outperformance since that follow through day in this area of the market, which is what we want to see. We want to see those tech and growth stocks coming up on our screens. Financial sector, I know this is an area that you've pointed out, Webby, as something to look into in recent weeks, and it looks like we are holding here. Any thoughts about financials?
Yeah, I thought they were really set up nicely. I'm glad that Warren Buffett is going to be, taking a much needed break in his life, and that let's go to Berkshire because that's a big part of the XLF. And I think the only reason why they didn't really break out this week was that was a drag on it. That
Yeah,
news and the market needed to digest it. And if that news would have happened 10, 15 years ago, I mean, that stock would have been down a ton. But it was it wasn't
total
everyone knew
shock.
this was going to happen. It was just
Mhm.
when was it going to happen. And it was a little bit of a hit to that area. But
Mhm.
I think, the JP Morgans, the Morgans, Stanleys, and Goldmans, they all look very interesting. And you want to have a group other than tech that is set up. Do these look
Mhm.
perfect? No, but yeah, the Charles Schwab, think that looks really good. And you've got the IBKR that's moving up the right side. So there's a lot in that space that looks like it,
Mhm.
it, it could be one of the leading groups for
Right.
a move higher.
Yeah, and even though it was not a surprise, the Buffett news, I think it was needed, right?
Yeah.
Because if they waited and, gosh forbid something were to happen and it was more of a sudden kind of thing, I think that would have been more of a shock to investors, But now that we have the game plan, I think yeah, that's a better situation overall.
Yeah, and I'm happy for him. Like you don't want to go down, like you don't want to not ever retire. That's
Yeah.
not fun. So good for him. He deserved it, and he made a lot of people a lot of money, and shared a lot of wisdom.
Yeah, it was actually kind of funny because last Friday you actually spent a good couple minutes
Yeah,
praising Buffett and then
yeah.
yeah. So,
He's great.
yeah.
And people find that weird because like we would never look at a stock the same way,
Yeah.
technically, but fundamentally, I mean, that guy's got it down,
Yeah.
and he's got some staying power.
Absolutely. Okay, industrials, we're starting to see a little bit of outperformance here. So you have your Boeing, your GE, your Uber in here. We looked it up the other week. So seeing some interesting action in the industrial sector lately.
Yeah,
Let's
the
also,
Boeing looks like a
yeah.
monster. We had that on Swing Trader, and we just it was kind of a timed type of thing. It wasn't going anywhere, so we were one of the styles with swing trading is if something is dead money, if you're up a little or down a little bit, you just take those chips off, and didn't get a chance to buy it back. It just went through too quickly. But
Mhm.
that's good for it's such a big part of so many indexes,
Yeah.
that it's good to see Boeing move, even if you're not in it, which I don't have a position right now, but I want to get
Mhm.
back into it.
Yeah, and this was fueled on Thursday by headlines around the new trade deal between the US and the UK. Okay, let's also take a look at utilities. We're seeing some improvement price wise, perhaps not as much from a relative strength standpoint, in terms of more of that. AI utility bent. You could take a look at UTES, UTES, and that's where we are seeing some interesting improvement in the relative strength. We've talked about stocks like GEV that have really been forming the right side of the basis. So these kinds of stocks are starting to make a comeback, Webby.
Yeah, and I do like it. And this is the My Cousin Vinny ETF. And I like that that's pulling back in nicely. If we can get an upside reversal next week, we'll try that one again. And it looks like it wants to move higher. Obviously, the deep seek gap down
Mhm.
on the left side is problematic, but I think it's put in enough time for the market to digest that.
Okay, we'll quickly try to run through the rest of these. Materials continuing to move off lows, but underperforming. XLY consumer discretionary. You have your Amazon and your Tesla in here. We're seeing, I think, in the last couple of days, a little bit of relative outperformance here, but that 200-day does loom large. Let's also take a look
I do
at.
have a position in Tesla. It's not in an orthodox place, but just since you mentioned that, I have to say that.
Mhm. Yes. Here's a look at XLRE real estate pausing after moving off lows. This is also more of that defensive area. So I feel like some REITs have been popping up on the screens, but nothing too outstanding. And then energy, that was the leading group today, up 1%, but it's been battered pretty badly. I think maybe there are some stocks in this sector that have come up on our screens, but in terms of just like at the sector level, we're not really seeing that widespread outperformance here.
Yep,
Um,
totally agree.
and then let's also bonus just really quickly. Let's take a look at gold and the new gold. So first, your thoughts on gold, Webby.
I think that let's go to a monthly on this one. And I didn't get a chance to catch your video this month with ropes. Did he talk about gold?
I don't know if we
Probably.
really spent a we I think we talked about how it's been acting great since this Mona Lisa of all cup with handles on the monthly.
Oh, the moment I like that. So
That's what he
my take.
called it,
Oh, is
yeah.
that what he calls it?
Yeah.
So my take, when you get a commodity and it starts trending, it's a little bit different than stocks. They hold their trends a lot longer, just generally. I'm not a commodity expert, but that's just my observation of it. So now that we see the monthly and how nicely that's moved up and in a clear long-term trend, let's go over to the weekly. And now we had some stalling over the last, the prior 2 weeks. That's clear distribution and stalling, but not to a point where it just broke down and came in to your 50. So if you're a patient person, if you're a Warren Buffett type of person, and you're in there, you're saying, okay, it's had a decent move. It's digesting its gains, and that's how I look at it. So not from a swing trade standpoint, more from a position trend
Mhm.
following standpoint. I think that looks fine. Now I do have a position in GDX, and we did put it on. And we did put it on swing trader, right? Let me. So much going on. Yes. So I bought that after that, and I think that looks really set up to go up, but also you've got a tight stop. Like today's low and certainly yesterday's low is where you would exit out because it's
Mhm.
positioned to break out. Now, a few days ago, it was also positioned closing at the highs, and then you kind of had that little mini expectation breaker the next day. So that's not ideal. So it's not picture perfect, but I like that so many people have already turned negative on the gold space. And that's what you don't want, everyone on the same side of, on one side of
Yeah.
the trade. So it looks good, and it kind of, if tech gets hit, this tends to bounce up a little bit. So it's nice to have that diversification in there.
It is. Okay, and then we'll just quickly cover IBIT. This is the iShares Bitcoin ETF. Full disclosure, I do own a position in this when it was getting around 51.50. I don't know if my trade, I don't think my trade price is exactly 51.50, but added a little
One of
bit
mine was.
yesterday. Yours was?
One of mine was I did trade it exactly at 51.50.
You
And
had to.
for anyone asking, at Sammy Hagar on Wednesday, he did play 51.50, and yes, I was very happy. I do have a position in this. We do have it on Swing Trader. It looks like it wants to go up to those old highs. We'll see. You could say that this hasn't even broken out yet. Like if you're
Mhm.
taking that step back, and it's just building the right side of a cup, which as it moves up the right side, you can always expect a handle. You don't always get a handle. So that will be interesting. So from a swing trading standpoint, if we get up to those highs and it starts stalling, from a swing trader standpoint, you're going to be exiting that and then waiting to see if the handle forms. If you
Mhm.
were position trading this, so more of an orthodox type of way, and you had it, you bought it over the last few days, or you had it from a week or so ago when it was going up through the 50-day, the way you like to buy things, then you're letting it run more
Yeah.
and giving it more space. And I would give it all the way probably down to the 21-day.
Mhm. That's my plan, and that's how I was able to hold through this little digestion over the last couple of weeks because it held the 21 day the whole time, even though one day intraday, I can't remember exactly how much down it was. It ended up closing down 1.3%, but it was down, 2-3% intraday or something like that, undercutting a lot of the recent lows, but it was above the 21 day and still profitable. So this another reason to bring this up is you are seeing a continued shift. Of course, there's so many different forces here at play with Bitcoin, right? And reasons for people trading it. But we have seen this as sort of a symbol, as it were, of your risk on area. Of course, it's not going to be day to day exact, but it does give you a little bit of a sense of sort of that high octane risk on mentality out there that some folks have.
Yeah, I think that was well said. In like what you were saying earlier about the XLPs and some of the slow pokey things that
Yeah.
you don't want to do well. You want this this one to do well because, like you said, it's a risk on. And that's when you're looking at the health of the market, you're doing that the mosaic thing. You're putting all these little pieces together and saying, okay, how are the leaders doing? How are the things that should be going down? Are they going down? Things that should be going up, are they going up? And so on. And you're painting this big um, picture. And this is a positive. But I'll be frank, if this one was down on some sort of news or something, it wouldn't turn me negative on the market. So it's nice to have, it's not a need to have,
Yeah, that's
if that
actually
makes sense.
yeah, that makes a ton of sense. Okay, let's check in on 3
It's
stocks
like
of
lemon in your water. You don't have to have it, but it makes it taste so much better.
there you go. Oh,
Just
yeah.
saying.
I like that.
Yeah.
I like that. Okay, let's take a look at 3 stocks to watch. Here's a look at Roblox. We've got a handle forming. Earnings are out of the way. We've seen some nice double-digit growth for the last number of quarters on the top line, and it's trying to move towards profitability here, Webby. But the relative strength in this stock is what's impressive lately.
Yeah, we were contemplating putting this on Swing Trader today, but we were more with the going into the weekend,
Yeah.
with everything going on, and we were pretty heavy, and we wanted to just dial it back a little bit to have some dry powder for Monday in case you had a week open and we got an upside reversal. So that's why we didn't put it on. But it looks good. I wouldn't do a full position with it. Even though the ATR is within reason, I think it's in the fours right now. It does tend to be more of a high octane type of name, so you've got to be careful. But the nice thing is if you were to have bought it today because it was kind of a setup day, kind
Mm-hmm.
of gives you the expectation that it should move higher, that your low from, whatever, 4 or 5 days ago, that's where I would put my stop at. So you've got a very clean stop that's not that far away and is a pseudo high octane name. And
Mm-hmm.
let's go to the monthly on it, if you don't mind.
Sure.
Yeah, this is probably the worst part of it. The worst and a good part is that when it went public, it was trying to go. So at least it held in and tried to go. So that it had some oomph in it. But then we had the bear market and that brought everything down and all these types of names. Um, so the fact that it went from 140 down to in the 20s, there's no way to say that's good. But at least it didn't go down in the low teens or something like that, and it just base build and is moved up. So it's a mixed bag. So again, another reason to you're always trying to rate your stocks as an A,
Mhm,
B, or C, and I would say this is in the C plus category. Which
mhm,
is fine. I'll trade C pluses. The base is a little deep, but you've got the RS line blue dots. The sales are good, but the
yeah,
the earnings are still negative. So it's a lot of, it's got this, but it doesn't have this
mhm.
type of issue, which lends itself to a lower rating.
Exactly. Absolutely. We want to see a beautiful monthly chart, the RS stacked nicely above those moving averages, accelerating growth on the top and bottom lines, and a beautiful base. We want all of that for it to be an A plus stock. So I think, like you said, very important to rate things here. But showing some good relative strength, we'll have to see if it can continue. Okay,
Yep.
next on our list is Chewy. This is another stock with relative strength here. Webby and RS line blue dot. It's getting very close to a breakout of a cup base at the 40 level. Oh, and I meant to say with that other stock you said ATR, just a reminder that's average true range, 4 being 4%. So you're looking at the average movement over the last 21 days. And that gives you a sense of the personality of the stock, the volatility, and also helps you manage risk. If you can know what to expect, okay, on average, it can move up or down a certain percentage in a day.
Yeah, and I was just checking. It looks like this is a 3.87 percent ATR. Now that's a little interesting because let's go to the weekly for a
Yeah, it's
second.
calmed down
And
a lot from its
yeah,
meme days.
yeah. So and we were talking about this on IBD Live this morning, where we had our good friend Brian Shannon on, which is always nice to have him on. He brings so many interesting things with how he looks at things with his anchored VWAP and all. And we were discussing how this had that rapid move on, just some news that, like you said, the meme related.
Yes.
So again, that dials it back, even though the ATR right now for 21 days is under 4%, it has that potential to have that big move up. But if
Mhm.
something can move up quickly, it can also move down just as quickly, if not even faster.
And it
So
did.
yeah, if I were going to trade this again, I would rate it as a C,
Mhm,
because of that. If it didn't have that, I would rate it a B. The sales on there are starting to pick up. It was in the single digits for a while, which is problematic for, especially for an internet retailer type of play. But you do have some nice earnings on
mhm.
there. General acceleration from flat to up to 50 in the 50% right now. So not perfect acceleration, but general acceleration. So that's nice. And as we talked about, it's a good service. It's something we used to use, and I think it's a lot of people
Mhm.
like it with the recurring. It's not just buying something, but saying, okay, I want this item for my pet delivered every month or every 2 weeks or what have you, and you get a discount. So it's good for the buyer and it's good for the company, because then they have the stay
Recurring revenue.
revenue. Yeah.
Mhm.
So I like it. Does it form? Is it going to form a handle here,
It might.
Allie?
It may, or it may not.
Yes, exactly, which is always the tricky thing. So, when I did my work on all the bases throughout history, back in from 1962 to 2013, I found that the hit rate or the success rate of cups with handles versus cup without handles were the same. Now, but in our mind, we always remember like, oh, this when you buy a cup without handle, meaning you just buy it through the 4009, the left side high, without letting it handle out. We remember the ones that fail. But the reality is, if you do a large sample set, there's
Mhm.
no difference that I found, it, really, in your hit rate and all the ways you would slice it between a cup with
Right.
handle versus a cup without, which was surprising to me, very surprising.
Mhm.
So that would allow me to buy it through 4009, but again, a smaller
Mhm.
size.
Yeah, and, I think it also depends on the way that it breaks out. Like some just look so stretched by the time they get to that prior high. It feels like, oh well, maybe the odds are likely that whether it's before the breakout or after the breakout, some sort of digestion or pullback, just in terms of risk management. Just something to think about too. To see if you can spot an alternative entry a little bit earlier, or what kind of stop that you want to set with the trade.
Yeah. So with that in mind, well said. I would use today's low. Let's say it gaps up on Monday. I would be using today's low as my stop on there, because if it came back down through that,
Mhm.
most likely it's either going to be a failed base breakout, meaning that it collapses into 30, or it's going to form a handle, and you don't know
Yeah.
which one it would be. So you just back away and let it do whatever it's going to do.
Yeah. Okay. Last one on our list, and that is an earnings breakout from this week. Insulet. The ticker here is PODD. Shares up 21% or so on the day, closing almost at day high. Did have a little bit of a test
Mhm.
intraday that we saw, but it was able to regain its footing and close around highs of the day. Very impressive. A blue dot breakout here, and an improvement in the fundamentals. We had a pickup in revenue growth to 29% from 17% the prior quarter. Also, some considerable earnings growth, up 67% after a little bit of a stutter step in the prior quarter, with earnings down 18%. But this is a very impressive move on earnings, squarely putting the stock back on our radar.
Yeah, all well said. Can we go to the monthly
Let's do
on
it.
this? So this had some huge moves in it, which is really important, because if it's had huge moves before, it can have them again. And you can see on the monthly where this is really a base next to a base, and it's a cup with handle next to a failed cup with handle. So it's put in a lot of time, and during that time, I think people are becoming more aware of issues around blood sugar, and obviously,
Mhm.
I'm pre-diabetic, and so I'm aware of those things and people that need insulin. I have a good friend who takes it the manual way, and having a pump would, be frankly a lot easier. And so I need to talk to him over the weekend of, why he's choosing to do it that way. Because it'll allow me to understand the story, and is there more of a potential um, with this one. So yeah, I always like to kind of get what they're doing. Now let's
Mhm.
go back to the daily, because the reality is this is extended, right? And but what you're looking for is this going to hold today's low and go sideways for, it'd be nice for 3 or 4 days or even longer to digest those moves, or the today's move, and stay within that trading range, and then give us something to trade again. So it's not something I would buy on Monday, regardless of what it
Mhm.
does. It's just not ready on Monday, but it might be ready by next Thursday or Friday, depending on what it does. So that's why you put it on your watch list on a big update like today. And thanks for pointing it out to me, because I hadn't seen it when I was searching for stuff. So thank you. You've got a great eye. And yeah, I think it looks
Mhm.
good and worth tracking, but extended to buy right here.
Yeah, we gotta go. So I will be quick, but my grandmother has some pretty intense diabetes, and a number of months ago we switched her to the wearable versus doing the injections, and it has helped quite a bit with
Oh,
her routine. You still have to, and there's a bunch of different ones, and I don't know if hers is from Insulet, but basically it comes with like a little remote, and you can type to make it easy. Was it a big carb meal, a medium carb meal, or a low carb meal? And then it sort of knows what to dose you. But it's also kind of keeping track, and will give you some sort of dose. Like if you forget, which is helpful for a certain population if
yeah,
they're not
yeah,
staying on top of it. But still, that's, you can't just do nothing ever. You have to take
yeah.
action. But and you change it out. My dad helps her change it out every couple of days. But
Oh,
it
it's that
is,
that often. Oh, that's good to
well,
know
she needs
because
a
the
lot. So
oh,
it
okay.
depends on your dosage probably. But it's shelf stable obviously versus like refrigerated. And then she also has a continuous glucose monitor as well. So she's all set up. But I'm obviously not a doctor, and
Well,
people
people
need
should
these things
get
for different
a
reasons.
yeah,
So,
but people should test out a continuous glucose monitor. Like pull up ABT. I use the one the Libra 3,
yeah, Freestyle
and
Libre.
just to get some to get some info. And at least when I believe at one point that they were giving out a free trial. So just check it out. It doesn't hurt to be aware of that situation. So I do like this space, and yeah, talk to her over the weekend and find out if it's actually an Insulet product, and
Yeah,
talk to your dad about what he thinks.
I'll have to ask. And so, okay, so in terms of trading it from here, if you missed the breakout, what do you do? I think that's kind of the tie the bow thing on this. We want to see it hold, ideally the gap up low, see if it can form some sort of tight new base, new setup here, right, Webby?
Yeah, and the alternative to that would be, if I could tell it what to do, it would be an inside day on Monday, come down Tuesday or Wednesday down closer to the today's low, and then on Thursday or Friday. So I'm telling it exactly what to do. So I hope it's listening. Shake out the intraday, shake out below today's low, and turn up. Now that happens a lot. I'm not just making this up. Happens a lot with gap ups on earnings. Then that upside reversal with a shakeout below today's
Mm,
low would give you a perfect entry point. And that's something we'd either put it on swing trader, or I just trade it personally.
okay. Yeah, we'll keep an eye out for that. Okay. I think it's ready to, or you're for your charts now.
All right, let's
Yeah,
have
let's
some
do it.
fun here. Okay. Um, it's always fun when I'm just on one laptop. Let's see. Can you
Yes,
see? Okay.
bi-weekly.
Okay, we are taking the Bob Weir, take a step back, and yes, he did come out on stage with Sammy on Wednesday, and can't wait to see him in a couple hours. So those who understand the reference get the reference. Um, this week was really kind of what you'd like to see. Now, contrast that to the move over here in November of 23, where you just kept on having these big moves up each week. Well, that was after, we had our three waves down and was really
Yeah.
more, constructive type of move that, that we had. Whereas this one was just sharp. Really, we had a crash. And the fact that we bounced up this much this quickly is very unusual and is very reminiscent of the COVID bottom
Mhm.
at, at this point. So having this higher high this week and higher low, that keeps the trend going. And just some icing on the cake is that we have a blue bar, meaning that our close was slightly higher than our open. And let's take a look at it on the Nasdaq and see if it's similar. Actually, kind of a little bit of a bigger body on there, so a distance from the high from the open on Monday to today's close, but very similar to SPY. So that looks good, but it doesn't. It's not a setup for it to move up a lot next week. With this setup, it can actually go either way. So sometimes you'll get a setup where it has to go higher or it really should go lower. Sometimes it doesn't give you a lot of clarity, and so that's worth being aware of. Now, here is the regression. Let me start off with SPY that we were using starting back in mid-February out until around here on the 22nd or so of April. And so it broke that, and we're just being aware that, is it able to stay above that downtrend? And when we get enough time on here, we'll remove this and put a trend up, but we just don't have
Mhm.
that much space since our follow through day. So we want to get closer to 25, 30 days from there. Same thing on the NASDAQ. And again, you can see that green line going through the red line there. So that your 21 day going through your 50, which is good. Now we're going to go over to your 50% retracement. And on SPY, I changed this last week. We had it here in the late March high. Now we've moved it to the February high and to our recent lows. And just a reminder, or if this is your first time with us, first, welcome. But second, when you're
Mhm.
doing these 50% retracements, we want to live in the northern hemisphere. So the 547.37, which is your midpoint of that, we want to live in that space above it. The higher, the further we get to the highs, the better. But at least we want to spend as much time above that as possible. Let's look at the composite. Um, Same basic thing there. So you're just looking for divergences. Let's go over to our levels. I haven't made any changes to these over the last several weeks, and we're just seeing if we can incrementally get through these spots. And you can tell that the 570 535, which is coincides with a lot of things, including the lows back over here in January. That is a level, also the 200 day, that we really want to get above and then make a floor, and life will be completely different. And same thing here with the Nasdaq. We want to get above this level that we just crossed through, that we're kind of just like going back and forth on the 17 925, and then eventually get up into this range, the 18,831. We will go over to our clean chart, only the 21-day exponential, and we're focusing always is that low versus the 1 day or the high versus the 21 day. So we've had this nice amount of space. Really started here on the 25th of April. We had this test on the 30th, so we have to restart counting of how many days above. So 1, 2, 3, 4, 5, 6, 7. So we are looking for 10 or more for that component of the power trend. So we're getting up there. So again, we want to not even penetrate the 21-day on an intraday basis. Let's see what we've got next. Oops, what happened there? There we go. Okay,
Mhm.
so same thing here on the Nasdaq. Nothing else to mention. So let's switch over
Yeah.
to our
I love that so we're above a rising 21 day. So
That's a nice
that's
thing, right?
progress.
Yes, baby steps.
Baby
Um,
steps.
and who told us about baby steps?
I don't know. Who told us?
Bill Murray told us about baby steps. Well, I'll
Okay.
tell you after the show. Okay, so half the audience got it. So here we've got SPY, and this is our Webby RSI, and we're looking down here at the histogram, which just measures in terms of average true range that distance that we were just visually looking at, and we do it this way to just be able to isolate that and see is it acting in a healthy way or not. And it's mixed. When you start off, you want to see more of a thrust higher, meaning more of a distance from your low versus your 21 day, and we're just not there. So we don't have that aspect of it, which is a bit concerning. But we are starting to get the trend. So you've got one thing, but not the other, and you just have to, keep it real. It's not perfect, but
Mhm.
it's okay. Now we've got the Nasdaq and same basic thing there. We're, just one ATR above the 21 day. So certainly not stretched in any way, but we really want to see some power. And of course, if we get above the 200 day early next week, we will start getting that power. And you want at this stage, you can't have it too high. Like getting up to a 3 ATR or more would not be a bad thing right now. It would actually be a very good thing. So we'll see how that goes. Now we're going to go over to our Bob Marley off high and just to see where we're at. And here's SPY. And so we're just looking. The green section is 4 ATRs off our high. The yellow is 4 to 8, and so on. So we had that correction all the way down into like close to about 10 ATRs off our high. So that was very severe.
Mhm.
But now we're back kind of in the green zone, which is a much better place to be. And we will look at the NASDAQ still in the yellow area. Let's take a look at the Qs, see if there's anything different there. A little higher, and we will wrap this up with the RSP and same thing there. So we do have more progress that needs to be made, but we're getting there.
Yeah.
As we said last week, we're in the
Mhm.
repair mode,
Mhm.
and so this week did a lot of good, like a lot. That as we talked at the top of the show, is really the only thing that was wrong was Thursday's close. Yeah.
Yeah. Yeah.
Besides that, it was a good week.
Yeah, and we did have a little bit of news there. There's still a lot of jitteriness around headlines. So got some a boost from the UK trade deal. Then the end of the day, it was uh, you know potential tax on those making above 2.5 million dollars, right? So we'll have to see how. Speaking of, so looking ahead to next week, we'll have to see how the headlines shape up over the weekend. So, in terms of the battle plan for the week ahead, feels like we're at a key crossroads here. We're coming up potentially to that 200-day line. Um, so it seems like depending on how the headlines shake out, we've got to be ready for next week, especially if we continue to make progress. Could we be in a position, as you said, by the end of the week, who knows, for a potential power trend? But we also have to be ready to back away if levels get undercut.
Yeah, can you still see me? Because you're frozen on my end. Can
I
you hear
can
me?
still see you. I think it's you,
Okay.
but
Well, it's a me problem.
it's
And you dropped the hint again of the song. Do you know what it
Did
is? So this is the
I?
fourth or fifth
No.
time that you said it this week.
We'll have to
So
see.
we no, no, no. It is now you can pick your
Crossroads?
choice of Crossroads. So
Okay,
either
there we
Robert
go.
Johnson, you can do Cream, you can do the Clapton version. And lots of people, and John Mayer did Crossroads. Lots of people have done Crossroads. So we're really there. And the Crossroads is: are we going to break above the 200-day or not? And if we don't, no big deal. If we fail here, probably do the 1998 double bottom type of thing. That would be the base
Mhm,
case, which would
mhm,
mean we would undercut our lows. But so tactically, what we would do if fail in a dramatic way here at the 200-day And I guess the easiest way to know that would be a close below the 21 day. If we get a
Yep.
close below the 21 day, I'm going to be I'll probably be in cash or close to it, with swing trader, as well as my own trading. So as long as we're above that,
Mhm.
there's still the potential. So
Yeah.
again, next week we don't have to go. It doesn't have to break above it next week. If we have
Mhm.
another inside week,
We can take
tight
it.
action next week, that's fine. And with a potential power trend for the following week.
Yeah. But one's gotta imagine, I mean, if there are these trade talks this weekend, there's gonna have to be something. I don't think it's going to be resolved, but how is the market gonna react if it is just, "Hey, we chatted," over versus something substantive, right? It's kind of what the buildup has been, this trade war between the US and China. So, is the market going to take it in stride? Like, we've taken like the GDP the other week. We've been, seeing a lot of resiliency, so it'll be interesting to see if that continues or not. So,
Well,
it's always fun.
I
What we do is fun.
it's a ton of fun, and
Yeah.
it's going to be fascinating, how the market not just opens up on Monday, but how it closes on Monday, right? Because your initial reaction might be, let's say talks don't go, the way everyone wants, and we get a gap down on Monday. Well, that could be a good thing if we get a
Reversal,
strong
yeah.
close and upside reversal. Now, if it's a gap down, go down, well, then you just got to start exiting stuff if we
Yep.
get underneath that 21 day. At least if that's your
Mhm.
style, that's my style. Um, so it's nice that we're having this, so that we're not having to wait months and months. We're going to get them in the same room, both countries, and see if, we can at least tighten up the ranges of where people are thinking. And the more
Yeah.
certainty we have, the better it is for the market and the long term for
Yeah.
the world.
Absolutely. And speaking of the 21 day, a couple of episodes ago, Webby and I did look at some historical precedents where he showed off his research of why he, in this sort of position underneath the 200 day, why you use that close below the 21 day as your signal to get out because it can save you a lot of pain. So we'll keep that in mind. All right. Well, thank you,
Yeah.
Webby. We
Well,
appreciate
one
it.
thing, what can I add one thing?
Yeah. Yeah.
Okay. So with that, if people want homework, what I would do is just go back over time on the Nasdaq or the S&P and just look at every time that you're underneath the 200 day and just study that relationship of what the index does versus, if you're I might have misspoken. If you're underneath the 200 day, look at the relationship with the 21 day, and when you trend above it, because lots of times when you're underneath the 200 day, you get these rallies that just
Mhm.
last for a few weeks, a few months, and then they fizzle, and then we roll down. And the easy thing to do would be just go back and look at last, it was either last week's or the week before, maybe both of them, where we covered those historical,
Yeah.
examples. And you'll learn a ton, and you'll also realize how important that 200 day, is. And if you have time on your hands, I did do a podcast, that we just recorded yesterday with our good friend Joe Fahmy on his podcast, which is a great, Joe's Happy Hour. And so that'll be dropping in the morning, and I, hope that everyone watches it.
Yeah, it'll be really, really good to hear from both of you guys. I'm sure it's an awesome conversation, and I know you will be tweeting it out. So we'll keep an eye out for that, Webby.
And one more thing, next Tuesday is the STSTU day. What does that
It's a
mean?
busy week for you next week.
It's going to be a fun week. So we're going to have on Tuesday, Justin and I are going to put our swing trader hats on and do um, our monthly, update with swing trader. I think everyone should watch that, whether you use the product or not. I think you'll learn a lot, frankly. And we sidestepped the market crash. We were in cash during that. It's still up for the year, which I'm very proud of. I think, we've done a great job, frankly. And then on Wednesday, as long as I have the energy, because it's it's going to be a busy week, I will be doing the podcast with Justin, and I think we're going to talk about ATRs. So that should be a lot of fun.
Exciting.
Yeah,
It's gonna be great.
I'll
All
shut up
right.
now.
No, that all good things to point out and promote and remind. So we appreciate it, Webby. All right. Hope you have a great weekend. We'll see you back here next Friday.
All right, see ya.
All right. And thanks everyone for tuning in. That is it from us for this week. But we will be back on Monday morning for IBD Live. Investors.com/IBD Live for all the details on that. We will see you there. And then we'll also see you Monday right back here after the close. Have a great weekend, everyone.